Hi, everyone. Welcome back to the Property Finance Podcast. And today we're doing part 2 of my interview with AI. So this is an interview with ChatGPT. One we did the first 16 questions, so we've got 14 left to go. So the first one is all about repayment and risks. And so question number 17 is, what are the repayment terms for a bridging loan? So very simply, when you go into a bridging loan, they will give you a set of terms over either 6 months, 9 months, 12 months, whatever you ask for. I would say always try and go for 3 months longer than what you think you need it for. So if you think it's going to take you 6 months to renovate a property, then it's going to take you another 3 months to refinance it. And you think, oh, okay, I'll be all right with 9 months. Go for 12 months because it will always run over. But in terms of repayment terms, length of time is always dictated by you. In terms of interest rate, everything else, obviously, we negotiate that as we go through. Question 18 is, what happens if I can't repay the loan on time? Very simply, if there is no communication from you at all to the lender throughout the process, you will get hit with the most horrendous extension fees or default interest, because lenders don't take kindly to no communication. It really frustrates them. It really frustrates us as the broker as well. But that is the big thing that you're going to get is default interest rates. And obviously, if you then continue not to repay the loan, obviously you look at repossessions, etc. They're pretty aggressive on bridging loans. So what I would say is, if you have any inclination that you are not going to be able to repay that bridging loan on time, go and speak to the lender, speak to the broker, set up some sort of extension. We've got one at the moment where we've extended it by a further 6 months. So it's possible you can extend them. Obviously, there are fees involved for the extension. So again, as I said before, make sure you always take the bridging loan for longer than you think you need it for, because it will obviously reduce the amount of time you need to extend by if you ever need to extend. But yeah, it's pretty dangerous if you don't repay these loans on time. So keep the communication on with the lender, with the broker, and then obviously try and extend as quickly as possible or refinance as quickly as possible. Question number 19, what are the risks of using bridging finance? And I think very simply, the risk actually comes back to that lack of communication. If you overrun, you do run the risk of big financial penalties, the potential of repossession. And those are obviously two pretty horrendous things to be involved with. So the risk of bridging finance really comes from naivety or lack of communication. I think both of which can be avoided. So I think when it comes to bridging finance, make sure you're speaking with the broker, the lender, setting everything up properly up front. And this is why it's so important to use a broker who understands bridging finance and development finance as well, because there's nothing worse than going to, for example, a residential broker who their day-to-day job is dealing with purchases of main resis or small buy-to-lets and trying to get them to do a bridging loan that they maybe haven't done a huge amount of and don't fully understand the terms, and then getting to the end of a bridge and going, well, I didn't know about that, I didn't know about that, I didn't know about that. Getting a broker that understands bridging finance should get rid of some of that naivety. And then communication is all just down to you. We as the broker can't force you to speak to us. But obviously, if you do, we can mitigate any of these bad risks that take place with bridging finance. And then question 20 is, how do lenders assess my exit strategy and why is it important? Simply put, they want to know what the exit strategy is so that they know that they're going to get repaid, and so that they know if things go wrong, that there is an exit out of this still, and that they're not going to be stuck with a property that they can't sell or that isn't going to make them their money back. So if you're selling, their assessment of it is obviously the valuation. The valuation will come back and say, well, this is what we think it's going to be worth at the back end. They can obviously then set their loan to value against that to understand, obviously, whether they're going to be short of their money at the end or not. Same with rental as well. They'll look at it and say, well, actually, the valuation says there's no rental demand, or there is a rental demand. So we know that going on to some sort of mortgage at the back end is or isn't doable. And that's why they assess it, because they just want to make sure that there's a plan A, a plan B, plan C, etc., for exiting the loan, so that if anything goes wrong, you can still get out of it. So that's why that's so important. And then the next set of questions is, are there alternatives to bridging finance and how do they compare? So to be fair, there isn't really an alternative to bridging finance. Bridging finance is a beast unto itself that nothing else can compare to. But what I would say is there is a movement in the market where people are starting to try and use bridging finance for refurbs, for developments, and there are lenders who are putting out products that don't really work. So trying to do a development loan with a bridging loan isn't going to work. So I think when it comes to alternatives, it's more a case of don't do a development loan with a bridging loan. Don't buy a buy-to-let with a bridging loan if you don't need to. I think realistically there is nothing else that compares to it, but don't use it in the wrong scenarios. And then question 22 is, when should I consider a bridging loan over other financing options? So very simply, if, for example, the property is unmortgageable, obviously you know that you're going to have to use a bridging loan instead of a buy-to-let. And then similarly on development finance, if you're doing a new build development, you're going to have to use development finance over bridging loans. And I think anything where there's speed required, you're going to want to use a bridging loan over any of the other options because nothing else is as quick. If you're doing something with planning, for example, you're going to have to use a bridging loan because you can't use development finance until the planning's in. So there's some of the scenarios where you would take a bridging loan rather than any other financing option. And then just some questions around the market at the moment. So what is the current demand for bridging loans? So I would say where we are at the moment is probably better than where we were a year, 2 years ago. I think a year, 2 years ago, the demand for bridging loans was actually to try and refinance out of maybe expensive buy-to-lets when the base rate was at its maximum and buy-to-let lenders were pulling out of the market and everything else. Bridging loans obviously were a good way of getting out of some of those expensive products, going from one expensive one to another expensive one, but it was allowing people to refinance when maybe they couldn't, and a lot of people's credit had been obviously poorly affected. So the demand was there and was quite significant back when the market was a bit in a downturn. Now the market's slightly better. I think we're in a position where not as many people are taking bridging loans, and the problem is every broker you talk to, every lender you talk to is going to give you a different scenario. But from our perspective, we're not seeing as many bridging loans now because we're seeing more people doing creative purchases. So they're buying with exchange with delayed completion, for example, to allow their planning to obviously go through in that period. Buying subject to planning. There's all sorts of different things they're doing to mitigate that need for a bridge up front. So yeah, I think in terms of demand at the moment, demand for bridging loans is probably lower at the front end, although where we have seen an increased demand is sales bridges. So where sales have slowed down slightly for some people, although a lot of the news and industry media at the moment and the BBC and Sky and all those guys are constantly putting out news saying, oh, the market's grown 3.5% and demand is growing, house prices are going up and sales data is all positive. We're seeing a lot of developers who just can't shift units. So that's where we're seeing a massive increase in sales bridges. And in fact, actually, I had a phone call on the way into the studio today where a lender's actually referred someone to us because then they haven't got the sales and this lender needs exiting from. And again, they want a sales bridge in place. So yeah, I think it's key from that side that there needs to be that product there to get people out when sales are slow. So yeah, that's where we've seen the demand. Then the next question is, are there any regulations or protections in place for bridging loan borrowers? So it depends whether you're dealing with unregulated or regulated. Unregulated, it's a tough one. It really is in terms of regulation and protection. So obviously the FCA aren't particularly interested. We were actually asked on some of our paperwork when we were dealing with unregulated stuff to actually remove the contact for the financial ombudsman. And we were told, can't deal with that while it's unregulated. Regulated, you have all the same protections as you would with any standard buy-to-let. But yeah, unregulated, it's a really tricky market there at the minute. And there's a lot of people pushing for more regulation in the bridging loan space. And then question 25 is, what trends are shaping the bridging finance industry right now? Kind of touched on this really. I think the trend of sales struggling at the back end is pushing the bridging market more towards focusing their attention on sales bridges as opposed to bridging front end. So I think that is a big trend that's kind of affecting things at the minute, is that people want to see more lenders in that sales bridge market. There aren't as many really pushing products for the front end as there were before. And then a few practical scenarios. So ChatGPT has given us some practical scenarios. So question number 26 is, what happens if the property sale is delayed? Or what happens if the exit strategy is delayed? So you've got a couple of options here. Is again, it comes down to communication. So as long as you're communicating with the lender, as long as they can see that the exit is going through, if there's a sale agreed, if there's a refinance agreed, they're going to be happy kind of giving you a little bit longer to let that go through as opposed to trying to go through the repossession and everything else. It's far more financially viable for a bridging lender to allow that exit to take place than it is to push them into insolvency or administration or repossession. And actually, one of the scenarios we had recently, we had a client who was refinancing, and because of a down valuation, his refinance was actually £50,000 less than he expected, but it was actually more importantly £50,000 less than what the bridging lender was expecting. So the bridging lender's redemption figure was 1.45 million. The figure that we could kind of get day one was 1.4 million. And the problem we had is I had to go to the bridging lender and I had to say, look, I'm really sorry, but there's a 50 grand shortfall here. And I kind of played my trump card a little bit, which was, it's going to cost you more than 50 grand to come after this client. It's going to cost you more than 50 grand to repossess, to go through all of that. You're going to lose most of that 50 grand, if not all of it, if not more than that, trying to go after 50 grand. So we kind of went through a negotiation period, and I worked very closely with this bridging lender, and we came up with an agreement where that 50 grand would be secured on another asset and would be paid off over time. And they've given him another 13 months to pay off that 50 grand. They haven't put him into default interest or anything like that. So he's refinanced the bulk of, well, in fact, 90 whatever percent of the debt, has only left 50 grand out of 1.45, which in theory means that lender's had all their capital back plus some interest. So that 50 grand is purely made up of interest, really, which the lender knows that if they ever went after him for just purely interest, really struggle in a court or anything like that. So there is always that negotiation with lenders as well. If there is going to be a shortfall, they're always going to be happier to work with you than against you. And they're never going to let you off any of the money, but they might be able to do something where they defer a bit of it down the line. And then question 27 is, can bridging finance help if my chain falls through during a property transaction? So this is kind of out of my remit. This is talking more about regulated bridging. This is essentially talking about using bridging finance for a chain break. So if someone further down the chain has lost their sale or something like that, you've got a property that you found that you want to buy, you were reliant on a sale, for example, then you could use a bridge to buy the property that you're looking at whilst you wait for your one to sell. So that's just called a chain break bridge. And then question 28 is, how do lenders determine the loan to value ratio? So very simply, they have a loan to value that they can go up to. So most is 75%. And then they then have a valuation done, which gives them what the property is worth. And obviously there's a purchase price as well. Sometimes the two differ. And that is how they determine what their loan to value ratio is, because they'll go, right, well, the property's worth, let's say, for example, £1 million. We know we can go up to 75%. So we know we can give you a maximum facility of 750,000. And then obviously the interest and fees and everything come back off of that. And then the last little section is choosing a lender. So question number 29 is, what should I look for in a bridging finance provider? And I would actually go a step further back and say, what should I look for in a broker? Because realistically, that broker is going to choose the best lender for you. So when I'm looking for a bridging finance broker, obviously I'm going to look at myself, a bit of self-promotion there, but realistically, what you're looking for is someone who is whole of market in the bridging space, someone who understands bridging finance, someone who's using bridging finance personally, so someone who knows where the pitfalls and issues are going to be, someone who's done a large volume of bridging loans as well, I think is always a good thing. Because what you want from your bridging lender is you want someone who's transparent, quick, and will work with you in the bad times. And they're kind of the three main points that I would cover. So the transparency is transparent about their fees, transparent about their extension fees, transparent about their default interest rate. It should all be there, black and white, not hidden in any terms and conditions. It should just be there, front and center. Then in terms of speed, I want someone who's going to move quickly, isn't going to ask stupid questions, isn't going to underwrite a bridge like a mortgage, because it doesn't need to be underwritten like a mortgage. It needs to be underwritten like a bridge. And so there needs to be a bit of sensible underwriting going on. And then obviously in terms of working with you when things go wrong, they need to not be working against you. They need to be helping you. They need to be trying to get their money back while also not trying to shaft you. And then last question, question number 30 is, are there specific red flags to watch out for with bridging loan agreements? The arrangement fee, when it's paid, how it's paid, what it's against. Is it against the net loan? Is it against the gross loan? Is there a broker fee? So checking what that broker fee is. Is the broker fee against the gross? Is it against the net? Is there an exit fee? Is the exit fee against the gross loan or the net loan? Interest rate, how is the interest charged? Is it charged daily? Is it charged monthly? Because if you're going to redeem one day into the month, you only want to be paying 1 day of interest. You don't want to be paying a whole month's worth of interest. So some bridging lenders do charge monthly rather than daily. And then other red flags are going to be default interest rate. If that default interest rate is really high, you probably want to steer clear. If there's big default fees as well. So there is a bridging lender who shall remain nameless, who charges a 5% default fee. So they charge 5% of the gross loan at the point that you run over. So even if it's by an hour, they charge 5%, and then they charge a default interest rate of 2.5% a month. I've never put a client with them, never will put a client with them. So that is one of the biggest red flags, is what are they charging when things go wrong? Some of the other red flags is, again, around their valuation approach, and also solicitors as well. So making sure that they're using good solicitors, good valuers. Outside of that, I mean, there aren't many other red flags that you would look for, in all honesty. As long as you know how all the fees and the interest works and what's going to happen at the back end if anything goes wrong, I think you're pretty well set up to know what's going to happen. But yeah, hopefully you found that helpful. That's the end of my second interview with AI. If people are enjoying this, let me know. I can keep doing it across a couple of different subjects. I personally have found it really helpful. I've been surprised actually by the quality of some of the questions. So yeah, really enjoyed doing my one on development finance, and that seemed to be really well received. Now we've done the one on bridging finance. Hopefully that'll be as well received. And yeah, if there's anything else you want me to do, let me know. But otherwise, thanks for listening. Catch you on the next one.